Hello, everyone, and welcome back to the GMS Weekly Podcast, where we break down the key developments shaping the global ship recycling markets.
And I'm Henning.
And I'm Ingrid. It's week 31 of 2026, and this week's story is Pause Breaks, Passage Opens.
The ceasefire didn't last. Geopolitical tensions remain high, but interestingly, oil moved lower. Shipping lanes through Hormuz began reopening, and recycling activity finally started picking up again.
Let's begin with the biggest development. The ceasefire may have been short-lived, but the market's reaction wasn't what many expected.
That's right. The week started with hopes that tensions between the United States and Iran might ease, but by midweek, both sides were exchanging strikes once again.
Under normal circumstances, you'd expect oil prices to surge.
Instead, Brent crude fell sharply.
Exactly. After briefly approaching $100 a barrel last week, Brent finished this week closer to $87, while WTI settled around $84.
So what changed?
Ships did. Commercial traffic through the Strait of Hormuz picked up noticeably. Qatar resumed LNG exports through the passage, and international efforts to safeguard the sea lanes helped restore confidence.
So the market was paying more attention to vessel movements than political headlines.
Precisely. The return of shipping through Hormuz reassured markets that one of the world's most critical energy corridors remains open, even though the wider conflict is far from resolved.
And there are still other flashpoints.
Exactly. Disruptions continue around the Black Sea, while uncertainty remains around the Bab al-Mandab. So risks haven't disappeared. They've simply become a little more manageable this week.
What about freight markets?
They spent the week changing direction. The Baltic Dry Index weakened early in the week before recovering, while Capesize earnings also rebounded.
So freight isn't running away anymore.
That's right. For recycling, the overall mix is actually becoming more constructive. Oil prices have eased, freight markets have stabilized, and vessels can once again physically reach recycling destinations through Hormuz. Those factors together make recycling decisions a little easier than they were just a few weeks ago.
And the market finally recorded a sale.
It did. The chemical tanker Stolt Kikyo was confirmed sold for delivery to Along at $455 per light displacement ton. It was the first reported basin sale in more than a month, suggesting that market activity is beginning to return.
Let's move to Bangladesh.
Bangladesh is finally moving from recovery back to activity. After weeks of devastating flooding, Chattagram has seen meaningful beachings resume as the latest delivery tide window opened.
So the backlog of vessels is finally moving.
Exactly. Ships that had been waiting offshore are now reaching the recycling plots. Local steel trading has recovered, and buying inquiries have become more active.
But buyers are still being selective.
Very much so.
India also had a significant week.
Probably the most important structural development came from Along.
Not because of pricing?
Not primarily. Steel plate values briefly moved above $400 per ton in dollar terms, helped by currency movements. Although buying interest at the waterfront remained relatively muted. The bigger story is that 2 Indian recycling facilities have been proposed for inclusion on the European Union's approved recycling list.
That could be a major milestone.
It certainly could. If approved, it would create the first direct pathway for EU-flagged vessels to be recycled in India. Combined with India's extensive recycling capacity and strong compliance infrastructure, it represents an important long-term development for the market.
Pakistan seems to be telling a familiar story.
It is. Pakistan continues to offer some of the strongest pricing in the subcontinent, supported by firm domestic steel prices and stable market fundamentals.
But there still aren't many ships arriving.
That's the challenge. For the second consecutive week, no new vessels were reported at Gadani. The appetite remains strong, but owners now have more routing options as regional shipping lanes improve, increasing competition for available tonnage.
Finally, Turkey.
Very little changed operationally. The Turkish lira continued to weaken, while attention is turning toward the country's latest inflation data.
But the bigger development may actually be happening outside Turkey.
Exactly. Turkey's position continues to depend on its specialist role serving European and Basel-compliant recycling. However, if Indian facilities are ultimately added to the EU list, the competitive landscape could gradually begin to shift.
Before we wrap up, how do the recycling markets currently compare?
Bangladesh continues to lead the market on pricing, followed closely by Pakistan. India remains competitive, particularly from a compliance and capacity perspective, while Turkey continues to serve its specialist niche. Overall, pricing has remained relatively steady, but the strategic positioning of each destination is evolving.
Let's wrap up week 31.
The ceasefire may have collapsed, but commercial shipping through Hormuz has begun moving again.
Oil prices retreated sharply, easing some of the pressure on global shipping markets.
Bangladesh is returning to operational activity, with beachings resuming and the anchorage queue beginning to clear.
The first reported recycling sale in more than a month suggests that market activity is beginning to recover.
India could be approaching an important structural milestone with the proposed inclusion of 2 along facilities on the European list.
Pakistan continues to wait for fresh tonnage while Turkey maintains its specialist position.
Ceasefire collapses.
Crude retreats.
Passage reopens.
Beachings resume.
That is the story of week 31.
For a deeper analysis of this week's developments, together with detailed pricing and market intelligence from each recycling destination, you can access the complete GMS Weekly Report.
Thanks for listening.
We'll be back next week with more insights from the global ship recycling markets.